Hey, welcome everybody. Welcome to a special edition of the Mohawk Forex scalping stream, where tonight, 7 PM here, we're going to live scalp the Fed interest rate decision as it gets announced and see what we can bag on gold. We'll check cable, we'll have a look at US30 and NAS as well. So yeah, as you can see here, we're on our 5-minute chart on gold. We'll put a line in the sand where the news result is going to come out. We've got our economic calendar. We pretty much know the decision is going to be 0.75 basis points, 325. So it'll be interesting to see how the market reacts to that. As we know, gold likes to go the opposite way. Good news, sell. Bad news, buy. But let's see. And then we'll have a look at cable, which has been in a range all day waiting for the news and has just started to buy back up to our New York and Asian lines, which we set. So that'll be interesting to see what kind of spike we get on this as well. And obviously we're plugged into Bloomberg. There'll be a bit of a delay on their stream, but we'll be able to see what they're saying about it as well. We'll listen to that.
In order to get inflation down over time, but the Fed should
and see if they surprise and go to 1% or 100 basis points, which they say they haven't got the guts for. Hence it's going to be 7.5 and what the market predicts, but we should still get some move. And all your projections are here. This is what everybody's looking for, really, is the projection, is what's going to be next. And say 325 is the projection for next year, going to be 3.8, then come down to 3.4 the second year. Is it going to be 4%? Is this going to be higher? This is the key thing, more than the actual headline rate, because pretty much everyone knows what it's going to be. I'm just going to print that. The projection is the key number. And we're going to go in on gold, in on IC markets, and we're going to be trading, what should we trade? 0.5. So we're going to do, I'm going to lower that actually, because it's going to be, we're going to go 0.2. Let's go 0.3. Just picking my lot size. Again, this is for entertainment purposes only. It's not financial advice. I don't want anyone to follow me. I always lose, obviously. This is entertainment. This is a bit of fun. And for those who want to learn how to true micro scalp, you join my trading group on the VIP Discord, which is, go to the website www.mohawkforex.com, and all the information's on there. So obviously I'm not advising anybody to follow me or listen to anything I say, obviously. This is all fun. and this is just before my dinner. I thought I'd do a live stream just to see, like last time we managed to bag $100, $200 in a few seconds. Let's see if gold reacts. But we'll go in the 0.3, which is a margin of 88, about $95. We're going to be trailing, we're going to be dealing with about $1,000 account. That's all, and no stop loss, no TP. We're just going to go in there and see how many orders we can fill at the market value. Obviously there'll be a bigger spread, going to pay a higher price, but we should get some decent moves. Is it going to be to the low side? I don't know. We're going to add our 1 minute time frame onto the chart here. There we go. Of our bands.
The Fed has to recognize the fact that they're going to cause pain and it will bring down growth.
Yes, I think there's certainly a
What's
few things going
Bloomberg
on.
saying?
One,
Yeah,
we've
they're
gotten
counting
more
down to
confidence
it.
in the near-term economy in terms of we're not entering an imminent
So as you can
recession.
see from our bands here, we're pretty much looking at a reversal. We want sales on gold ideally. We're well outside our bands. We want it to come back inside the bands. Our volume is high, so you can see here that we're kind of in the golden zone on the Fibonacci, so we could get a nice rejection before a buy zone. We've got a demand zone here, supply zone above here, so who knows, it's a nice W pattern as well. There's no prediction. I mean, this is it. You just, with technical analysis says it'd be nice if we got a sell. Dropping down to our center line would be 184 points, which is 18 pips, which would be very nice if we could do 5 or 6 trades on that. That would have to be, I think, as predicted. We might get that drop. You know, let's see.
How are you defining recession? Because
this comes down to how good your broker is for executing these trades as well. Let's say there's pound dollar cable. Are we going to get a push up to our New York line and Asian line set earlier? We've had a good day today. You know, good win rate. Took about 3 or 4 losses out of about 35 trades, so we've done well. This is bonus. This is a bonus stream, a bonus event, because last time we got a really good move on it. We're 5 minutes away.
Forecast that the inflation is going to come down. I think they really need to get it above spot inflation. In terms of recession, it's become very complicated. Certainly, with a technical recession in the first half of this year, 2 consecutive quarters. I think from the Fed's perspective, it's all about the labor
Gold is
market.
already trading low at 1669, which has been around 1800. So we can zoom out and see levels. And we've got our fib here. Look, we can see levels of support at 1663.9. Resistance levels are going to be above that at 1672. So depending on which way it goes.
You'd have to give up the Dodger season tickets. Right now, let's go to Priya Misra to save the hour, and Priya can do that. Priya, I believe it's yield up, price down. The pros, particularly in credit, like to talk about
save that. So we've got our 1 minute, so we can see price is coming down now beautifully already. Look at this. Look,
facing huge bond losses.
it's a nice drop.
Higher in yield. Do we get convexity where it speeds up out of the stock market? How does that unfold in an experience none of us have ever experienced?
Let's see if this pushes down.
So you make a good point that they are facing negative total returns. And when you get negative
Nice
total returns, bonds have been
red
seeing
on the
outflows.
5
So
minute.
I would argue we're already seeing some of that convexity in the asset management side. I think the insurance side actually might see some inflows because you've not seen total yields, this level for a very long period of time. So I do think there could be some buying from the insurance pension side, but the negative convexity you're talking about from the bank portfolios that are
Brilliant.
facing
We
negative
just managed to scalp there, $15.
from the asset manager
So that
side,
was good.
we
Went in
continue
on
to see
that.
outflows. I think is making this
Show
environment
just
so
a
tough
quick
for fixed
micro
income.
scalp.
We could always rely
Just
on
$3 a
global,
trade, 5 positions.
money coming into the US.
And that's my
Well,
first
global rates
trades
are
done.
rising. I'm watching the BOJ with great concern. If there's any change there, I think it has big ripple effects across the US as well. So yes, I think the supply demand for fixed income
Had to jump in on that. Sell signal came in, broke inside our bands, and we want to get out before the center line. Like I say, it was only a couple of minutes to go. That was a cheeky scalp for just $15, but I wanted to show you can just do that. Just posted them results.
that the yield
So that's
on 10-year
nice.
treasuries could go up to 5% if they abandon the yield curve control in order to shore up
Because we
currency.
know we don't want to be stuck in the trade before. And you can see, look, it's hit the bands, hit the centre band.
because you can't control
So it's hit our demand zone here, look, so
and interest rates.
we're getting ready.
Right? You can't
I'm just going to take this line out so we can all see how this is going to affect on a 5-minute time frame and a 1-minute time frame as well. So if nothing else, you can see how the market moves.
It's just a matter of time until they have to start adjusting yield curve control. But you know that's
We've literally got
interesting because I think when
1
they
minute to
start
go.
Adjust yield curve control. It's a snowball effect, meaning where does it stop? Does
And again, we're looking for the extremes of the bands here for pullbacks, reversals, and on the 5-minute we're looking at the bigger picture.
Just like we'll get a weaker euro.
We've got a sell label at the moment, but again, this could easily fly straight back up. And we're looking for that magic 100, 200 points. I mean, it's 100 points to the edge of the bands. It's going to have to be a surprise result to push it further.
All of a sudden, something will happen.
RSI is back in the neutral zone as well, which is good. That's where I like it to be, so that it hasn't got any particular direction before a major news event. And literally it's going to come down to how many times I can click and how many positions I can fill. The commission is $1.50 per trade as well each way. So it's going to have to move for me to cover everything, and I'm looking at 30 cents a pip in terms of value. So we're going for the 0.3. It's only a small lot size. Don't want to be anything too crazy in case we get the wrong direction. We can just close out on a loss. That's totally fine. And there's the drop. Look at that drop. Look at that on gold already. There it is. Look at that drop. Perfect.
Thank you. Just to pick up on that,
Let's see how many positions we can fill. And we're out. We're out at $100. We're out.
Does he just read that speech again?
Brilliant.
33 minutes.
Perfect. What a drop. There we go. And we managed to get 43, 50, 50, nearly 200. Fantastic.
First off, as an asset manager, we're seeing huge inflows from insurance companies. There's a lot of demand for insurance products, which they buy long duration assets.
That's how you do it.
The thing is, I agree with her view more, and the place where I might disagree with Matt is
There's the drop.
Deceleration in prices is happening much faster.
And look at that out of the extreme of the bands. Perfect.
Dominic Constant, Lisa picked up on a little bit earlier.
As predicted.
Said exactly the same
I said it would sell.
Basically, it's already in the works. We just aren't considering it, and so this is the soft landing argument. Not necessarily meaning that there's not going to be an increase in unemployment. That's the reason why it's important to define what you mean by soft landing, but that you are going to see a little help, a little bit of a lucky situation, at least for the Federal Reserve, going into next year.
I'm thinking back to a week ago when Mark Cabana of
I'm just going to go lower.
It's a great interview. Remember,
talked about the risk of the Federal Reserve overdoing it. But one comment from a Bloomberg subscriber in the last 20 minutes or so, and perhaps this is
Look at that drop.
question for Rich Clarida a little bit later in the program. Ask your guest about the lag timed for rate hike effects. This Fed has done so much in just 6 months. They've done as much in 6 months.
That's brilliant. $300 in 30 seconds.
Cycle. TK, they've done a lot.
They've done a lot. They got a lot more to go. And I think the consensus is we're not even to neutral. Maybe today we're at neutral. Maybe it's the 2 meetings to the end of the year. But we do
Watch
have
it push
a
up now.
paper to this from Jackson Hole, the Bloomberg Dollar Index, including
Watch the reversal.
strengthened 2.5%. That may not sound like a lot to listeners and viewers. That's a big number.
Let's watch it on the 1 minute.
Bob Michael at JP Morgan Asset Management. He said we're only halfway through this.
That's an amazing result. So well done to everybody if you caught that. We got 100, 200, 250, 300, $300, and that was in 30 seconds.
Of monetary tightening. So if we're not even halfway there, there's more to come, and we haven't yet felt the full effects.
Let's see if it's going to push down for any more.
It raises just the uncertainty and sort of the reason why people are on both sides.
There's another one coming in about 30 seconds. Scott, this was awesome. It's good to see you. Thanks as always.
Good to see
Thank you very much.
They're behind on the stream, as always.
Steve and Dave use eToro to invest in the financial markets. Steve follows the feed for the also bumped up their unemployment forecast to a medium of 3.8% this year, 4.4% next year, and in 2024, and 4.3%.
Brilliant, and we got some more again.
Growth takes a big hit this year. Annual GDP marked down to just 0.2%.
We've got another 4 positions there closed out on the sell as well.
The economy will expand 1.2% next year, 1.7% in 2024, and reaches a 1.8% potential rate in 2025.
This is it. This is why it dropped, because it's all about this prediction, the projection rate. It's going to be 4.6 next year is what they're trying to get it up to, so that's why gold dropped.
They said those had softened.
Mike McKee, thank you. Ton of numbers to work through there from Mike McKee. So let's go through it together. Just open up the summary of economic projections off the back of this. So GDP gets a cut.
So we're talking another 100 there. We're talking 400. That's great results.
And so does the dot plot in a major way. The market's responding to this, as you might expect. Equities heading south on the S&P 500. Yields heading north, particularly at the front end of the curve. We're up 13 basis points now on a 2-year. Going into the decision, we took out 4%. We're basically on our way to taking out 4.1% right now on a 2-year. As you might expect off the back of that, the dollar is a whole lot stronger. TK, you can take a pick on what currency pair you'd like to see. Let's just pick up on sterling as an example. 112 handle, 112 handle going into the OE tomorrow, 112.50 right now. That currency
look at sterling, look at that. See, you could have picked whichever one you wanted.
Plunge or cratered is probably what you want to see here. In international economics, folks, dollar moves are very small but very important. Maybe only yen at 144 or 48 is there, but sterling is stunning. Euro even more so, I would say. It's just all of these moves and these dialogues change the game for the governor tomorrow with the Bank of England.
4.6 is your dot, Bramo, for 2023.
It matters for markets. What you're seeing is a very hawkish 75 basis point hike, and that is basically forecasting there is more to come, and they are willing to take pain in the economy, and the market is responding.
Yields up some 13 basis points on
Well,
2 year.
there they are.
Big move. Let's see if it sticks.
After an already big move.
Yeah, let's do one more look here at the data. I think it's so important on the fixed income market. The 2's10 spread, Priya Misra, negative 50 basis points. That's where she was when everybody said no, it could never happen.
10 basis points moved just today, by the way.
Yeah, less than that. And the real yield, by the time you get to your critical show on Friday, John, where's the real yield going to be? 1.30, 1.
Based on this price action, Tom, I might not make it to Friday.
Well, we will have to see. It is a Fed meeting, and this is a different Fed meeting for us. He's a Fed vice chair.
So that's brilliant. So that's put us at 50% on the day on the account. So that's been a successful day, thanks to the Fed dropping even lower. But like I say now, we're waiting for reversals. So look at the pound dollar, look at that beautiful drop as well. So we're looking for buys back to the NY line later on.
Look at the science of monetary policy, which just exploded in this pandemic crisis that we have. Your summary there is about imperfect information. How blind are good people like you right now?
Well, I think obviously we and the Fed are navigating imperfect information.
Still dropping even further. Could have held that. RSI is now 21. We're oversold. So I just want to wait for. I'm tempted to go in on the buys.
You hear about the demise of forward guidance. The committee's relying a lot on forward guidance to tighten financial conditions. And I think the fog of uncertainty is the nature of the pandemic shock, and the policy response and the reopening means that a lot of the traditional models and guideposts aren't really helping. And so I think this is more of a look at the data as it comes in and wait for the inflation data to fall.
This just shows you can't beat true scalping, micro scalping. Forget everything else you see out there. This is the quickest way to win pips.
22 at 4.4 for 23 rather for 4.4 for 24 at 4.4%. Do you think they've ripped the band-aid off just yet, or are they doing it slowly still?
I wouldn't say it's ripped off. I think but the contrast with where the committee was in March, which is what I've called the immaculate disinflation, with no rise in unemployment, no fall in growth below trend. So I think this is recognizing that, as the chair said, some pain will be part of disinflation. My own personal view is it probably will be more than the rise indicated by the dots, but I think it is acknowledging.
Oh, we're going to get a pullback buy now. Obviously, what goes up must come down, etc. We know that. That's what it's all about. Current projections to get to 4.4. Next year they're saying 4.6. Second year they want to reduce it to 3.9, and then eventually get it down to 2.5. after a 2.9. So this is what the market's moved on. Obviously, figuratively speaking, it's better than expected and higher, so gold drops. It's just the way the markets are. So 325 is what everyone expected, as we said, and the confidence up in 21 minutes time if you want to trade that as well. We're done. Been a great successful stream. Just a quick one, a bonus stream, just to show you how you can trade this. And even though if you miss that initial move, when things move this way, they don't just shoot back. It's very rarely they just go this low on one big breakout candle, then pull back. It's usually there's at least 2 or 3 candle continuation. As you can see here, we've had basically 2 candles now selling. Now we're getting a rejection. Now we've got a chance to get back into the buys possibly. Let's see. Everyone's trying to push up.
And then it takes longer.
By inflation, you mean core inflation.
Yeah.
See, folks, this is important, Lisa.
Let's see if it's going to push up or not.
Mentions it and just assumes core, while all of our listeners and viewers are assuming the crushing burden of real inflation.
Although real inflation,
always a little pullback.
Inflation has been coming down, and the fear
and we got
is
it.
that the core has continued to go up. Are you concerned that Fed policy doesn't have
we've got another $30-40 on that little pullback.
Markets on the economy as it
Very nice.
With a lot of it insulated with corporations.
Let's see if it's going to push up any more. This is great.
I think there's an element of that. Milton Friedman,
back in the zone.
Very quotable. One of his quotes was, "Monetary policy operates with long and variable lags." I came to think during my time.
So it's just about executing the trades, just trying to click as many as you can.
Because the economy is very financialized. You are correct. The terming out and household balance sheets are in great shape because of all the fiscal transfers.
Brilliant. And we've got some more there. Yes.
I'm from Missouri on this.
So I'll just post these last results.
Condition tightening in place, and probably what we'll get today
on the
is
buys.
Going to begin to show up in the data. As I said, the big question is we have a red hot labor market. 6% wage increases aren't consistent with 2% inflation. So I think that'll really be the issue. How much demand ahead do you need to take in order to get that underlying inflation down?
This is really important. So you don't think that there is the same kind of lag time as other people seem to think, that we're seeing it right now in real time as the NASDAQ falls about 1% here, and as you see yields rise. Has the market...
And there's the final trades. That's it. I'm not going to risk any more. Crossed inside our bands, so we took the bounce back.
I would say thus far that the Fed's made very clear it understands that tightening financial conditions are part of the process.
So all done.
Inflation down, and I think this is an element,
all done in 10 minutes. Scalping.
Time will tell if it's enough, but I do think today is an important move in the direction. So there's a lot of talk they might do 100 today. In the end, they didn't. Right. But as you mentioned a moment ago, they essentially got the effect of that, and maybe in a more durable way by putting it into later rate hikes.
You mentioned inertial a couple times.
Yeah.
So we've got an inertial force of policy, institutional certitude, worried about credibility, and the rest. What is the confidence we can have that they can experience a tightening and then know when to say when, or are they completely ex post, dealing with every bit of economic data out there? I mean, to diminish inertial force.
That's it. We'll see if gold creeps back up. 1660 now. Like I say, you don't want to risk too much. Overstay your welcome. We've got a load of green. We've made good money, and that's it. You just got to call it a day. So we're now nearly 27% up on the account for the day. So quick wins.
More focused on actually getting tangible evidence of a durable decline in inflation, and what that does mean, related to your question, is that it does mean the risk is overdoing it ex post. But I think if you look at Fed reaction functions pre-pandemic, they were actually quite responsive to the unemployment rate. That was because inflation was so low and stable, there wasn't a month variation in inflation. And so what you ended up with are rate cuts really triggered by rises in unemployment. I think at least for a while we're not going to see that.
You're saying the richest job was easy pre-pandemic?
No, I'm saying the entire industry's job was easy.
Everyone's.
So that's their they're looking at 4.6% for 2023, and that's why gold dropped. So it was a great move. A cable as well. We'll still wait to see if that comes back to us. We're really low on the fib, as you can see. Just broke out that golden zone. It's been in that golden zone all day, and then it decided to broke. US30 also dropped. really was just a case of picking the one that you wanted, and for me gold is always the nicer one to trade. NAS, everything exactly the same, it doesn't matter which one you pick. Even oil reacted as well, so but gold's always a good one on these bigger news events like NFP, inflation, CPI, and obviously interest rate news, so this is a good one.
Over 25 basis point movement, then 2024 and 25 it just all falls apart. I'm wondering if, given the fact that there are no models for what we're coming out of, that we should put much stock in what the Fed thinks is going to happen next year, let alone 24 and 25.
So again, if you like what we do, then you go to the website www.mohawkforex.com and subscribe to the channel. So thank you for joining me on a nice little live stream. We bagged a load of pips, we got out of it safe, no losses. So again, thank you to everyone on the team for joining me. And like I say, subscribe, like, and so you get notified of when I'm live next, and we'll do some more true scalping. So until then, stay safe everybody, enjoy the Fed pips, and we'll see you on the next live stream. Take care.
It's not just about 23th.